Okay, first of all, I probably will try to get out of that corner you painted me into. So the first point we're making is that we're actually very much agreeing with Morgan Stanley. We see very challenging outlook for stocks overall in the second half of the year. We expect a recession. We think that rate hiking cycle is not finished. Earnings need to go weaker. That's really not a good news for stocks. So overall outlook on stocks is negative. Within that, if you're a long-only investor, you have to beat an index, you have to invest into stocks. We say prefer US to the rest of the world. So we are not really saying S&P is going to shoot the stars out, but within equities, S&P looks better than other indices. And the reason for that is that, as we're saying, it's a downturn. Stocks are going down. So what do you do in downturn? You try to find companies. Actually, Inditex is a really good example today where earnings, where margins are better protected, right? So it's not about really strong growth. It's about protection. So we think that US is in a better position. US companies are in a better position to protect those profits. I mean, we talked about OECD data today. Japan, negative revision. Germany, and kind of broader Eurozone is technical recession now. So those cyclical areas, that's where we see bigger challenges. So it's relative preference for US over rest of the world.
Well, how dare you take it to a more subtle, nuanced world than my binary picture that I painted you into.
We are a strategist here, right?
Marija, I do have another question for you. And the question is which S&P and which US stocks? Because one thing that all our viewers are really, really aware of, the fact that you've got this amazing concentration into these 7 or 8 mega names which dominate the S&P, around about a quarter of the market cap. And then you've got the rest as well. So is there a big valuation discount between the two? The mega names, dare I say it, the Nvidias and Microsofts and Apples of this world, and the rest?
No, absolutely. You're absolutely right. So, I mean, what's driven S&P US stocks higher is mega caps. But, I mean, the point I would like to make is that, okay, we prefer US to the rest of the world. Why do we prefer US to the rest of the world? So what do I want to own in this kind of recessionary environment? I want to own quality growth stocks. A lot of them are tech mega caps, but there are like broader kind of group of those defensive growth stocks and quality growth stocks. I really don't think that buying cheap stocks, valuation argument is really important right now. We are going into recession, so those stocks that are traded at a discount, usually for a good reason, right? And those good reasons why we kind of assigning discounts are going to those stocks, to those names, are going to amplify it in recession. So I think really going for value is a wrong point in the cycle. So it's defensive, it's quality growth. So that type of the stocks we want to own.